good afternoon, good evening, traders from across the globe. Welcome to our 724th installment of short-term trading live with Oscar, baby. Yeah. Traders, these videos are going to keep coming at you every night. These videos are here to help you learn how to be a better analyst. And if you become a better technical analyst, I assure you at some point it should help you to become a better trader. We do know that futures trading is extremely risky. It is not suitable for all trading accounts and can cause substantial financial loss. So if you do not recognize this game, if you don't have the amount of hours necessary it takes to study to get this right, if you do not recognize that a stop is your best friend, then you shouldn't be trading commodities. For you traders out there that are cowboys that don't mind getting out there in front of the front there, putting yourselves on the front line, jumping on the back of the Bronco, whatever you want to call it, we got something to talk about here on the board, baby. Let's look at the date. This video is being filmed on Wednesday for trading on Thursday. That's April 28, 2011. Traders, what's on the board? First off, a green Omni again, baby. And that green Omni yesterday worked perfectly. What's on the board? Well, we know that we had a meeting today, right? Bernanke had a press conference after the Fed meeting. In that first ever historic press conference, he took some questions. Traders, this is my 29th year in this business. One of the things I have learned to do is listen to the Fed. I know how to plow through, disseminate through their information, read through it, and figure out what the Fed is trying to tell us. And I am here to tell you this. Bernanke got in front of the cameras today, and he had one message to give us. Everything else was fluff, traders. I absolutely listened to everything he said. I thought about it for hours. Here was his message. Bernanke asks us traders, banks, fund managers to assist in pushing down the U.S. dollar. Traders, you may not believe me, but I don't think many of you have 30 years experience at this. I'm almost pushing 30 years listening to the Fed every announcement throughout my career. They always have something to say, but it's usually one thing out of all the text. What I am telling you, Bernanke said today was this. It's okay to stay short dollars, you banks and fund managers, you traders out there. Help us push the dollar lower because it's helping to buoy our stock market. And that's what Ben said, and that is stay the course, so to speak. So what I am telling you is Ben gave us a signal to stay long stocks, to stay long euro currency, to be short U.S. dollars, and likelihood, of course, is to sell U.S. bonds. But the main thing that came out of today's meeting, I think the only thing that came out of today's meeting, was for Ben to signal to us that we can stay short dollars and long stocks. That's what I read through that Fed report, and I assure you I am pretty good at listening to the Fed. So take my word. That's what Bernanke said. We are not touching rates right now. We are not going to make the dollar go higher. You guys can stay short and enjoy the ride. So that's what Ben had to say. That means banks, fund managers, and traders will sell the dollar. The euro will take off, and the stock market will move higher, and bonds will pull down lower. That's what all of this should mean. What else is on the board? Bonds looking bearish. Wonder why. And U.S. indices looking bullish. All for the same reason. As the Fed pushes down that dollar, pushes up our stock market, pushes up currencies, foreign currencies, our dollar continues to go down. The bonds start to drop a little more. Metals go higher. Some commodities move higher. Some have enough supply to meet demand's needs, so they don't move up as quickly. But a lot of the commodities that are a little bit rare right now, or let's say there's not enough supply to meet demand, take off when the dollar gets pushed lower. Traders, there's nothing we can do about this right now. This is our Fed. It is our Fed. If you are a U.S. citizen, this is their approach. It's what they think will help get us out of trouble and continue on our economic recovery. Look, if the stock market's going higher, if your 401k is starting to go higher, and you got to deal with the dollar going lower right now and some inflation at the store, you know what? Deal with it and stop crying. Do you expect that this whole recovery, everything's just going to be rosy for the entire recovery? You got to realize that if the Fed is using certain tools to buoy our stock market, of course, someone's got to pay for it somewhere. The U.S. dollar is paying for it right now. We're paying for it at the pump. We're paying for it at the cash register. But that is a transitory price. It's not, it's not going to stay that way. At some point, if the Fed has this right, they will get a chance to raise rates. The dollar will skyrocket. Commodities will come back down. The top end metals will be put in. But at this point in time, that's not what's happening. Dollar's going down. Commodities, many of them are going up. Metals are going up. And currencies are going up versus U.S. dollar. And that's the way the game is right now. It is buoying our stock market. There's nothing you can do about it. There's nothing I can do about it. It's what the policy is right now. Trade it. Or as I like to say to my omniacs, SWAT. Shut up and trade. Stop complaining. So that's what you need to do, okay? Trade what's before you. Nothing you can do to make changes here in the policy. Trade what they give you to trade. There's nothing you can do about it but trade it. Okay. So, Bernanke asks for our help. I think we're going to give it to him. Bonds certainly looking bearish. I will show you why in the chart segment in a moment. And the indices looking quite bullish, and I will show you that. Traders, Omni Camp, thank you very much for you Omni Campers that are coming. Make sure you book your plane tickets and get your hotel rooms, okay? Omni Camp is the 20th of May, the 20th, 21st, 22nd, 23rd, and 24th. Maybe, is it 4 days? 21st, 22nd, and 23rd. So it's the 20th through the 23rd, 4 full days. All right. So now that we got that right, thank you so much, you Omni Campers. I much appreciate you guys coming to Vegas. You certainly are going to get a great education while you study with me. Traders, I am about to show you some charts that were a real eye-opener for me. I hope they're an eye-opener for you. If you like what you see in this chart segment, come join me. Grab a free membership at my site. It's livewithoscar.com. Memberships are free. Jump into my chat room where I am live on microphone and camera as often as I humanly can do it. 24 hours a day, you will find me in that chat room training and teaching others how to gauge these charts. Come join me at the site. With no further ado, let's go look at some charts. Okay, traders, the first chart you are looking at this evening is the very same chart I put before you in last night's YouTube video. It is the emini S&P, the daily bar. Gave you a projection of 1383 and told you the market should start to break out of this inverted head and shoulders formation and start heading towards that projection. Well, this is what we got on Wednesday. Traders all the way to here, and I think on Thursday we just head straight on up towards that projection. So you can see that the inverted head and shoulders, which is bullish, is starting now to push the market towards its projection of the 1380 area. The lovely hold of the Omni Trading Academy's proprietary moving average on the way down. That capped the bottom, and we rallied up. This inverted head and shoulders is clearly the technical that is moving the market higher. But let's look. NASDAQ, same chart I gave you in last night's video once again. But right now we have the projection all the way up here at 2476. Traders, I think we can easily get there. Here's where we got to yesterday. On Wednesday, I think we can easily move higher in that NASDAQ. Look at the German DAX. Hello, Germany. Thank you to my German omniacs out there. Look at the DAX inverted head and shoulders getting over previous highs. In fact, it has bested previous highs. That is a very bullish look. Look at the projection, Germans. 76.50 in your DAX. If we get this right, that's where you're going based on this formation. What else do we have out there? Look at the FTSE. This is a great example of an inverted head and shoulders formation. It's almost picture perfect. London, here's your market. Shoulder, inverted head, shoulder, breakouts expected. FTSE's expected to move so high it will not fit on my chart. I can't even show you the projection. That's what the FTSE looks like. Let's keep on going. The leader of the free world, the U.S. Dow Jones Transportation Average Daily Bar, leader of U.S. indices. Look at this wonderful parallel channel it's in. Look at how it rallies up, comes off a little, rallies up. I think we go all the way to the top of this channel. Projections are much, much higher in the Dow Jones Transportation Average. Now, traders, Transportation Average, we know leads the dollar, well, I should say leads the ES around, leads the NASDAQ, leads the Russell. This is our leader, right? Well, look at the MACD indicator on the transportation average. This is a very important indicator. This is an indicator of trend. Will trend continue? Is trend going to now change? This tells you trend is intact and will continue towards the upside. Gotta love the MACD, moving average convergence divergence on the transportation average. But there is more. Look at the slow stochastic. That is a completely bullish picture in the slow stochastic right here. That is also on the transportation average. You got to love these indicators. Now, 30-year T-bonds, traders. This is what we are selling into. It's what we sold into yesterday on Wednesday and Wednesday night into Thursday. We think this is a head and shoulders, an upright head and shoulders this time. What I was just showing you were inverted head and shoulders, which are like a V. This is an upright head and shoulders, opposite of that. And shoulder, head, shoulder projection is for much lower. What we expect after a head and shoulders is formed is a test of the head area, or the proverbial head test. If the market, after putting in the right shoulder, starts to run up, gets towards the middle to the top of the head area, and fails, a big breakdown is expected. That is exactly what we expect here in the 30-year T-bonds, especially that you had a rally leading right up to Helicopter Ben's announcement and his press conference. And then, right after that, it immediately turned around and put in a downward spiral day. I think bonds head towards the downside, just like I told you in last night's video. Now, if you'd like to see some indicators with bonds, they're exactly opposite of the transportation average. Look at the CCI, Commodity Channel Index on bonds, pointing straight down, traders. That's bearish bonds. Look at this. There's more. Another indicator I pulled was the RSI. In fact, all the indicators that I pulled on the 30-year T-bonds were bearish. RSI, Relative Strength Index, another bearish indicator. Now, what could be making all of these indicators bearish? The fact that bonds are going to head down for the rest of this week. That's what I think. Look at slow stochastics, extremely bearish right there. Now, why would the bonds be able to move in the way they're moving and the stock market go the way it's going and euro currency go the way it's going? Because of the U.S. dollar. Look at this thing. It is in a complete tailspin. And now that Ben has come out and asked for help pushing it lower, rest assured, dollars go under 70. Dollars should break down to the 68 area, maybe even as low as 6,400. But for now, we have projections down to 6,800 down here in U.S. dollar, and I think that's where we are going to go. This is what's making our stock market rally possible. It's helping our economic recovery, even though it's making some inflation at the cash register. It is helping the U.S. get back on its feet. You got to give the Fed credit for what they're doing. They said they were going to do this. They are doing it. It is not falling out of bed. It is slowly eroding, and that is what you want when you're using pushing down dollars as a tool in an economic recovery. Traders, pull your own charts, do your own homework, always make your own assessment before taking someone else's opinion. But go look for those inverted head and shoulders, look for the upright head and shoulders in bonds, and tell me if you have the same opinion after looking at that technically that we have here at the Omni Trading Academy. So, traders, you've seen the charts. There is my technical argument for why we have a green Omni on the board, baby, for U.S. indices. Again, bonds look bearish, indices looking bullish, dollar index looking bearish, and that's what I think happens for the rest of this week. Hey, earlier today I was blessed. Fox Business Network, thank you so much once again for calling me to a TV interview. Neil Cavuto, thank you so much once again. And Charles Payne, thank you. I had a very good time on the show today. Neil, I got to come to New York shortly. I'd love to buy you dinner when I'm in town. I will certainly look you up when I get there. Thank you for all the times that you've had me on your show. Greatly, greatly appreciate it. All right, traders, so here we are. It is Wednesday night leading into Thursday. We are buying dips in the ES. We are selling rallies in the bonds. We are buying dips in the euro currency. And we don't really trade U.S. dollars, but if we were, we'd be selling U.S. dollars. That's the way we think Thursday goes. What's unique about what we do here at the Omni Trading Academy is we don't try to recap what happened yesterday. We try to forecast what will happen tomorrow. That's unique, traders. Most people will never get out in front of a camera and tell you exactly what they think technically is going to happen tomorrow. They're all much safer saying, hey, this is what happened yesterday. But we are unique in what we do because we 1,000% believe in our technical analysis, which has no opinion. And if you get the analysis right, you should be brave like me enough to get out and tell people about it, because I know the analysis works. I know that fundamentals always come out in the charts first, and there's no better roadmap on this planet to future pricing in our markets, as well as technical analysis. That is the best roadmap out there. Thank you so much, technical analysis. I would not be who I am without you. All right, traders, that's about it. I'm going to get out of here and go back to my trading rooms again. Make sure you grab a free membership at livewithoscar.com and spend your day with me. Beats the crap out of trying to do this stuff alone. You can have a 29-year veteran in your corner helping you understand these market wiggles. Traders, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this mantra to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.